Hello traders, Gary Wagner here at just about 12:30 in Honolulu, 5:30 in New York. It is Wednesday, 22nd day of January 2020, and this is the daily report for gold and silver. Even with a slightly weaker U.S. equities markets, we did see gold trade in a very narrow and defined range, a total range of about $10 on the day, closing slightly higher on the day. The star today has definitely been Palladium, moving up about $131 and going to yet another record high. We'll talk about both metals on today's show. But first, let's take a look at current pricing. As you can see, extremely muted action in gold, trading in a very, very narrow range, under $10 on the day, currently up 60 cents at $15.5850. And the low today was $15.50 and the high $15.5980. Platinum gained over 1% today, $11 at $1,018.60. Silver had a nominal gain, about 3 cents, $17.83, but the market that shined brighter than anything was Palladium. Palladium actually gained $132 in trading today, closing at $23.6490, obviously a new record high. Let's take a look at our charts. Yesterday, we spoke in detail about the doji candle that we identified on a weekly chart. A doji, of course, is simply a candlestick in which the open and close are identical, or a tick or two apart. Tick or two apart is the case that we observed yesterday. Today, I want to focus in on the daily chart because what we are seeing is a continued level of resistance, and that area continues to get stronger as more days go by, and gold does not have the ability to trade above that. The level that I'm speaking about is approximately 1562 to about 1565. You can see that in some ways, what we're looking at really could be described as a rounded bottom right in here, but nonetheless, when it does take stabs at these highs, it fails to close above it. And for the most part, over the last couple of weeks, it has failed to even trade above it, except on this one single occurrence. And what that indicates is that the high achieved at the beginning of the month, when we saw gold trade as high as $1,613, may be a short-term top, and we could be entering into some sort of an ABC correction, some sort of a corrective period. This is what I will say. As long as we cannot get an effective close above this area, it becomes more and more likely that we're going to see lower pricing. If that is the case, the first area that we would want to look at would be about 1540, and that is simply based upon this top here. We've got this high here, and it has not been able to take that out. And then, of course, below that is going to be about 1520, and that represents this top right in here. Below that, of course, is going to be a major move down, which would be about 1449. But I think that 1500 on a psychological level should hold some weight in terms of it being an area where we could see potential support. Now, if in fact we see this market go lower, as I spoke about before, I don't believe it's going to do it all in one leg. We might see a move to about 1520, 1525, a move back up, but still below 1562, and then a final move down, whether it's 1500 or a little bit lower. It is for that reason that I'm recommending that we maintain our neutral stance with no active trades in gold or silver. Which brings us to Palladium. Palladium has been absolutely on fire. We can see that it has had a very, very strong move to the upside in terms of the tact or the angle. That angle is almost parabolic, but not quite parabolic. And look at this move today, $132. In fact, when we look at Palladium pricing over the last month, 2 months, what we're witnessing is a great number of consecutive green candles as it relates to individual daily moves. Now, a green candle simply means that it closed above the open. We do have a couple of occasions in which it closed below, but if you can see, for example, on this one, as well as this occasion, on both of these red candles, Even though it closed below the open, it did result in a higher high than the previous day. So we've got an extreme move to the upside. So the real question is, how high could palladium go? The fact of the matter is, this is a fundamentally driven market. There is less supply than demand. As long as that exists, simple economics will tell us that it will move higher. If we look at something like an Elliott wave count, which I do not believe has as strong validity as a market that's trading within a given range, not going to new all-time record highs, what we can see is this. We have seen this market move since May of last year, and it was trading roughly at about $1,300, really gained close to $1,000. Our Elliott wave is saying that we are in the top of a third wave, and then when we go below it, the intermediate as well as the minute is sitting all at 5. So 355 tells us that we could be near a top, but it has been in an oversold market for quite some time and continues to generate these numbers even as it moves to higher highs. What it does also tell us is that at some point when it does come down, the numbers that we would look for in terms of a retracement, they come in at around 2100 here or 1900 here. And then lastly, once that fourth wave concludes, it is projecting a fifth wave to take it to almost $4,000 per ounce. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.